Okay, so in the class of today, what we are going to do is we are going to look at inducement and yeah, using the concepts of pullbacks that we taught last time in the previous video. We are going to look at the concept of inducement. Let's say we have a market, right? We have an uptrend market. The market is doing something like this. Now, if you want to spot your inducement in this scenario, right? Is your inducement. The last pullback that the market created, this is your inducement. So if you are looking to use this inducement to mark your point of to mark maybe your valid break of structure, what you need to do now is you wait for the market to push down, take out the inducement, then gives us a valid break of structure. In this case now, this becomes a valid break of structure at this point. That's a boss, right? Oh crap. Okay, yeah, this is a boss at this time. Now, let's say at this point in time here, right? This was our last pullback that was created. Let's say this pullback never got taken out, so the market created something like this. What do you do in this scenario now? What you need to do in this scenario now is you simply move this inducement to this level. You move that inducement to that level. Why? This is no longer the last pullback, right? This is no longer the last pullback, and the market has not yet taken out any inducement to give us a valid break of structure. So this is not a break of structure in this case. This is not a break of structure. If that happens again, you can move it again. You can move it. Then what I see many people do, right, where many people get trapped in this SMC world is they at some point in time they start doing this, right? They start doing this. They start mapping out points of interest here, mapping out a break of structure here, a break of structure here, a break of structure here. Even if the market wants to buy, right? Even if the market wants to buy, your your interest is not on this zone. Your interest is not on this zone. You see the first zone that the pullback created, that is not your interest. Your interest should be from this second zone. This is where you should even start thinking of looking for a buy. This zone here is just designed there, it's kept there on purpose to trick you, to induce you to enter a wrong trade at this point. That's why it's called inducement. Now, if the market continues going, if the market continues going up, right, and it doesn't come back to, let's say, give you an inducement, you keep shifting, you keep shifting until the market gives you what you want. Because as the market is pushing up as well, right? As the market is pushing up without taking out this inducement, you see that the market most of the times is creating liquidity here. Trendline liquidity. Now you are starting to understand. The market now is building this trendline liquidity. What at some point in time the market will do is the market will do this, right? The market when the market comes to this zone, you might see a small reaction, something like this. You think that, oh, those my positions, let me add. At the end of the day, market just does this, and you say, ah, and the market continues up. Those that were selling here, right? Those that were selling at this point will also be in losses because the market doesn't only in see every strategy, right? Every strategy actually works. Every strategy actually works. Just know when to use it and improve on it and avoid being liquidity in the market. That's the only thing that you have to do. See, it's not just retail traders that are the liquidity. Some people have this concept that people that retail traders, people that don't trade SMC, let me say it like that, they're the liquidity providers that provide liquidity for the SMC. Everybody is a liquidity provider in the market. Everybody will be liquidity. If you don't wisen up, will be liquidity. No matter the strategy you're using, smart money, ICT, or CRT, or even Malaysian SNR will be liquidity if you are not smart. You see, right? When the market gives us this break of structure, though actually those some of those people that were using that normal SMC that you have been seeing everywhere on YouTube, they will be making some money. They will be making some money, but at some point in time before they realize it, the market, the positions that they bought here added. This will just happen. It wipes out all this move happens now, wipes out all the money. Now, for some of them, right? Some of them will reverse now and think, oh, okay, now that this has happened, this is my change of characters at this point. This is my change of characters at this point. Let me like sell here. The market has been just petting you. The market has been petting you because they will see this, right. They will know that, okay, this is a change of characters here. This is my point of interest. Let me sell here. You sell again. You see that profit that you have been making up here, the profit is gone. You took a loss here, you took another loss here. The, if you are not good with the risk management, you see that the profit that you have been making up here is gone. And now those SMC traders that bought here and thought, oh, let me add more positions here, they get stopped out. And finally, where does the market come to? The market comes to maybe somewhere around here, and you see how it buys. This happens in the market very often. Happens very often. And you see now that those people that were saying that said they were trend line breakout traders, right? Some of them will be selling here. They will, when they sell, they will see this reaction. They will be, oh yeah, that's a great move. I'm going to add in positions. When you add in position, the market just hits. When I'm teaching it, right, when I'm teaching these things, it seems as if I'm just talking. I've traded this strategy. I've been trading for 4 years. So I've traded trend line. I started with trend line. I learned every trick in a trend line. I learned the angles. You know that trend line like this, they do have angles, right? They have a certain one that they said, oh, if it's too straight like this, maybe like this, it's not good to trade. If the trend line is too stiff, it's not good to trade. I've traded all those strategies. I've traded ICT as well. I've traded the other SMC before I came to true SMC, the one I teach now. It took 4 years before I found. That means it took 4 years. So now from here, what you see is many people will get trapped here, but don't get trapped. Focus on your inducement levels, right? This is your inducement level or market X. Once your inducement is taken out, you can start looking to maybe take a position on the first POI that you get. Now, if you have multiple POIs here, if this first POI fails, you don't need to come and buy here again. You just go straight. You wait for price in the last POI. Okay. Now, right. This one is basically just using inducement to enter without a break of structure because you see no break of structure here. So this is just using inducement to enter. Now, where is our break of structure in this case? Where do we get our break of structure in this case? This is our break of structure here. That's our break of structure. You already know why, right? It took out this inducement on this. Yes, it took out this inducement. When a break of structure occurs, what do you wait for as a trader to enter a trade? Or what do you start? What are the criteria that you need to start looking out for? You wait for inducement. If inducement gets created here and yeah, the inducement doesn't get taken out, there's no trade. And another inducement can be taken, but can be created, right? This is your last pullback here. So it's called inducement. The last That means the last pullback. If price is going up, the last pullback that price created will be called inducement. It should be a valid pullback. Now, let's say after this inducement, right? You know that okay, after this inducement has been created here, price may be pushing down. If price start pushing down now, this is your first point of interest here. Okay, this is our inducement level here. It has been taken out. So the first point of interest, the first order block or order flow that you get is your first point of interest. Now this one is called a decisional POI. The reason why it's called a decisional POI is because it has a 50-50 probability of working out. 50-50. So what I normally advise my students to do is, let's say let's say you are trading a pro forma account and you have been risking 1% on your trades. When if you want to trade off a decisional POI, right, you cut your risk into half because it has a 50-50 probability. You divide your risk by half and you take 0.5. You take 0.5% of the risk you have normally been taking, because this POI like this, it can also fail. It can fail, and it has just a 50% success rate. That's what I mean by 50-50. Now, right, if this POI here fails, this POI fails, the inducement has already been taken out. So what is your last line of defense? Is this extreme POI that will be found somewhere around here. This extreme POI has a high probability win rate. When price gets to this zone, right, you can wait for your confirmation at this zone and you buy. You can wait for your confirmation. Those that normally trade aggressive, right? If you are trading aggressively without no confirmations and you're always buying off this zone, you discover that at most at times, you always keep failing. You always keep blowing your account. If you are an aggressive trader, you don't wait for confirmation. But when you trade off this zone, you have somehow a good success rate, because once price breaks out of this zone like this, the market has changed direction. Once price breaks out of this zone, the market has changed direction. So if price has taken your inducement and price is pushing down here, you can start looking for the reaction here. When price reacts here, it creates a change of characters and we can buy. We buy, you can target this high here. But to be on the safe side, right, I will just advise you to just target mid of this yeah, level here, or you can target just maybe somewhere from this last, because this was the last order, bearish order flow here. You can just target somewhere around here. Don't be greedy. If you want a high success rate, so yeah, that's it. We remember, for there to be a break of structure, we need to take out inducement. And yeah, when you take out inducement, then price breaks above, we have a break of structure. And for this high, right, let me delete this. This first pullback here doesn't just act as a some sort of it doesn't just act as a normal inducement. Once the market takes out this, if the market is pushing up here, and once the market takes out this first pullback, when the market takes out this first pullback, what happens now is this higher high. This is a higher high here, right? This higher high has been confirmed. This higher high is confirmed in this case. When the market push, yes, if the market is going up, right, it creates inducement and it takes out the inducement, even if it has not yet broken above. This here is already confirmed as a higher high. Yeah, this is already confirmed as a higher high. So there are some people that, because there are people that do counter trend, right? There are some people that when this happens here, they can go into, let's say, because the market is fractal. When the market is going up like this, it's also creating small structure like this. If you look very well critically on a smaller time frame, you'll see that the market will also create small time frame inducement and small time frame this thing, small time frame breaks of structure. Somewhere around here, you see that that small time frame structure will tend to be bearish. That is where people take their counter trend. But of course, counter trend is also risky. You do that when you are extremely, when you have practiced for long. When you have practiced for long. So basically, this is how you mark your structure, right? So I'll be taking you to the charts. I will show you the trade, the setup I sent during this week, and yeah, I will show you how we have been mapping out our structure. Okay. So from what you see here, right? From what you see here, you normally, if you are mapping, this is a bearish price action. So if you are mapping a bearish move, right, it's good to start from the top, from where the move switched from being bullish to being bearish. That's where you should probably start from. So yeah, I'm using this time frame, right? I already took a look at my bigger time frame. So yeah, no need for me to be showing you all that. It will just make the class longer. So if you see here, right, the market had been pushing up here. The market had been pushing up. If you see here, right, this was our last pullback here. Look at this very well. Look at this. We need to take you need to be concentrated to not to miss some of these candles. In the beginning, you will miss them, but as time goes by, so yeah, if you see here, right, if you see here, this is higher than this previous highs here. So it created a pullback, created this pullback. Then you see that it broke above, right? It broke above the pullback, confirming our pullback. So when price came back, it took out this our pullback. This our first pullback here is called inducement. This our first pullback here is called an inducement. And and once it took out this inducement now, we waited for a break of structure. We waited for a break of structure. Now, right, this is our last break of structure in this case. When this break of structure occurred here, we were still being bullish. We were still expecting price to go up. Now, do you know the inducement? Do you know that there's one thing I've not marked here, right? This is our inducement at this level. There is a pullback here like this. It's very small. I never wanted to mark it because even if I mark it, many people will not see it. There's a pullback here. It's very small. So now, when price took out this pullback, right, we should have been looking to buy. Let me actually show you. Let me actually show you how many positions we could have just gotten out of this zone. After price took out this inducement, this was our extreme POI here. Let me show you. Right. After price took out that inducement, that was our extreme POI here. We could have gotten this position. Just a very simple and straightforward position with lower time frame confirmation. Now, when price created this inducement here like this that you barely see, but it's there. It's there. When price created this inducement here, we could have still gotten another position here. You don't see, we could have gotten another position here. So this is where you don't see most of these things when they're happening. I'm sleeping. I get up very late. I don't need anything to disturb my sleep. Sometimes I get up in the morning and the thing has already happened. I'll just go back to bed. Get up in the afternoon and trade New York. I don't need to stress myself. So now, right? So when the market created this, we were supposed to buy here, and we anticipating the market to go up at this point in time. But what happened is this our low, right? At that level, this was our strong low. So the strong low failed to perform its duty and push prices up. So it gave us this change of characters at this point. This is a change of characters. When this change of our characters occurred, the first thing we wait for is for our inducement. If this change of character might occur, but if it happens that, let's say, if it happens that this change of characters here just occur in one swift move, there will be no inducement to sell from, and price can just continue up. This happens a lot there. This is a trick that I'm sure I'll make a TikTok video on it. Make a TikTok video on it. And yeah, without inducement here, there's no reason for you to sell. Without If this move was just one swift move like that and price was coming back up rapidly or even slowly to this zone, there was no need for you to sell. This change of characters here will not support this. Without inducement here, this zone will not be supported. And what you can see is actually price might sell, but what price will likely do is price will just come here weak above this. Yeah, okay. As I was saying, right, this characters here, if you don't have inducement on this leg, just know that the extreme zone you're looking to sell from will cause you wahala, a lot of wahala. It will show you shaggy, it will show you shaggy pro max. So what you are waiting for is for price to create inducement in this zone. So if that inducement is not there, what price might likely do, it might just slightly continue up and continue the bullish trend, and you'll be like, this chalk here was did I get fooled, or is my strategy somehow? It's not because your strategy failed, it's just because you don't understand the rules. You need inducement to sell. You need liquidity. You need liquidity. Without the liquidity, if you fail to spot where that liquidity is, you will be the liquidity. That's just it. So after this break of structure, if you look at this leg that broke structure, you see that our first pullback is this one here, right? This is the high of the pullback. After the high of this pullback got taken out here, after the high got taken out by this move, right? Market tap into this point of interest. Now, the reason why I don't mark this only this one candle, right? You might be seeing people marking this. This is called order flow. The reason why they mark this last series of candle is it's called order flow, and the reason why is because if you take these three candles here, right, you will go to a bigger time frame. You see that these three candles like this, they constitute just one candle. It's just one PY in a bigger time frame, but in a smaller time frame, like 30 minutes, you see that this is maybe one, two, three, four candles. Right. Yes. So this is where you should have looked to sell. I should have gotten in this position somewhere around here, but I did not get in. I was sleeping. That day I was sleeping. then up, yeah, because okay, now that price has taken out our inducement and yeah, it has broken below. This is our valid breakout structure at this point. At this point in time. So what are we waiting for again, right? We're waiting for inducement again and for price to mitigate our point of interest. Now, if you look here, right? If you look here, let me zoom in again. If you look here, this is where our inducement was. You might have missed this one if you are still learning. You might have missed this one if you are still learning, right? But there's a pullback here. There's a pullback here. If you look very well, you'll see the pullback. This is our lowest candle here. The high got taken out here and the low got taken out. So when price came up, it took out the high of the pullback. And yeah, from what we get here, this is our decisional POI here, like I said earlier. That's our decisional POI, right? I did not get into this trade. All these things were happening. I was not around. I was doing something else, maybe sleeping. Now, right after price took out this inducement, it gave us this break of structure. That's a break of structure. This one here like this is also a break of structure. Sometimes I mark them wrongly because I just get things mixed up, but it doesn't mean that I don't know what is supposed to be there. So now after this break of structure here, what are we waiting for? We're waiting for inducement to get taken out and we sell, right? So if you look here, you see that was our last pullback. But the reason why I did not take this pullback is I was thinking maybe yeah, this pullback doesn't appear on the 1 hour time frame, and it might be a it might be a trap. So yeah, just due to instinct and yeah, I map this structure. I look at it on the 1 hour on the 45 minutes time frame again. I did not see this pullback. It's not there. So I use this pullback that was visible. So when I use this pullback now, when this pullback got taken out, our extreme POI was this one here. That's how you saw me. I came about this trade which I sent to you. And currently when price dropped to about somewhere around here, I took out some positions and I break even. My break even is somewhere around here. And at the moment, price is reacting in a bigger time frame. There's a bigger time frame POI to the left, to the left side. That's why price is reacting from it. I took a look at it yesterday night, and I exited most of my positions because yeah, this zone like this is found on the bigger time frame POI. There's bigger time frame POI somewhere to the left. So basically, that's it, right? That's it. That's how you mark. That's how you map your structure. That's how you take your entries, and you avoid being induced into trades. The best thing is avoid being induced into trades. Will not help you. Will deal with you. And if you don't mark structure rightly, you see somebody will come maybe like here. The way I see the people mark structure on YouTube is very funny. Somebody will come here, map out this break of structure, is expecting to sell from here. Price just come, they cry. After they come and mark how not then after the changes as a change of characters, they map this out as their POI. They map this out as their POI here. When you map this out, there's one funny thing with price here. Price when price comes to the POI, it will not just pass. Price will stand there and make as if it wants to buy, make you give you the confidence, add more position, and price just wants you. And the way that price always moves through these zones, right? Just one massive move like that that you not even have time to say, hey, if I do not put stop loss, let me close manually before you open your eyes and understand what is happening. It has already happened. So it's just to go through this, right? Go through it again. Go through it again. I don't think there's anything about inducement that I've not shown you again. I've shown you inducement today. I've shown you a break of structure, right? And I've shown you partially entry. So what we'll be focusing on next class will be entry zones, right? High probability zones. Then yeah, high probability zones and how to enter your trades. So I'll be uploading this video to YouTube. So those that are you will be watching from YouTube, these classes right there in the series, they're in the series. If you need to study from these classes, you need to start from part one. You don't say that part one is boring. Don't say that part two is boring. If you skip one, all the things that you have learned will be useless. If you skip one of the classes, all the things that you have learned will be useless. This is you see that this strategy I'm teaching you, right, it has a systematic approach. I started with pullbacks, and after teaching you that pullbacks, I came now to inducement. You see that inducement, from when we came to inducement, now we are using those pullbacks as inducement. There's a criteria that you need to use this specific the last pullback as inducement. That's why I spent time teaching you that pullback. Now I've taught you inducement today, and I've used that very inducement I've taught you today to teach you how a valid break of structure is supposed to look using that inducement. That is how this strategy is. That is how this strategy is, right? You move from A, B, C, and D. If you miss out inducement, you never get your break of structure. If you never get the correct break of structure, if you miss that class on inducement, you never get a correct break of structure. And if you miss that class on pullbacks, you will not get a correct inducement. So yeah, that will be, I think, do you have any questions? Hello. Okay, that will be all for today. I think, yeah, guys, if you are still watching this, please subscribe to my channel, like, follow for more content like this, and I'll be dropping another video explaining the cons of SMC. So make sure you watch that video, right? And if, let's say, you are just watching this video, you have not watched a video on pullback, go to the previous video. You'll see a video on pullback that explain you how you can get how you can identify pullbacks, right? Because I know that if you cannot identify pullbacks in this video properly, you'll not be able to identify your inducements. And if you cannot identify inducement correctly, your break of structures will obviously be wrong. So if you are still watching, please subscribe, follow for more. And yeah, I'll be leaving the link to the broker I use in the bio and the link to my Telegram channel. You can join. And yeah, I'll share amazing trades on the channel. Thanks for watching. Have a good time. Have a good trading week. God bless you all.